Step 1. Saving for a deposit. The bigger the deposit you can save, the better the mortgage deals you'll be able to access, often with lower interest rates. While saving for a deposit is usually the lengthiest part of the process, it's often worth saving for longer if it means you can make the most of better deals that will cost less in the long run. You'll usually require at least 5% of the total cost of the property you want to buy as a deposit. This means if you wanted to purchase a home worth £250,000 with a 95% mortgage, you'd need to save £12,500 of your own money and borrow the remaining £237,500. First-time buyers can get help with saving for a house deposit by paying into a lifetime ISA, which provides a 25% top-up from the government in addition to what you save. Step 2. Find out how much you can borrow. The amount you can borrow depends on the size of your deposit, along with your income and your credit score. There are many mortgage calculators online that can help you to determine how much you'll be able to borrow before you take the step of speaking to lenders directly. At this stage, it's also important to consider the additional costs associated with buying a home that might not be immediately obvious. Factor in spending on conveyancing surveys and stamp duty, depending on the cost of the property. Step 3. Decide where you want to live. One of the most important steps in the entire process is deciding where you want to live. For many, this is the area they already reside in or have grown up in, while for others, it's a totally different town in a different part of the country. It's best to draw up a list of the factors that are most important to you and your family. These could be the distance to work, school catchment areas, transport links, the number of shops and restaurants, general atmosphere and sense of community, crime levels, or local infrastructure plans. Booking a short trip to visit any of the areas of interest will help you get a general feel of the place. Step 4. Apply for a mortgage in principle. This step takes place when you found a lender that would, in principle, be willing to lend you a certain amount towards the price of your home. Having one of these will make you a much more attractive buyer, as it shows you're able to secure the amount of money required to purchase the home. In fact, many estate agents will ask if you have a mortgage in principle before allowing you to view homes, particularly in a crowded market in a popular area. Step 5. View properties. Once you've found some properties you like, you can contact the estate agents and ask to set up a viewing. Viewing homes in person will give you a better understanding of their potential and allow you to imagine how the property will look for you and your family. If you find somewhere that you particularly like, you should consider viewing it more than once and at different times of day so that you can look out for any issues and get a real feel for the atmosphere. Step 6. Make an offer. In the vast majority of cases, a prospective buyer will make an initial offer that is less than the asking price. However, if there's interest in the house from multiple parties, you may need to offer the asking price or more. This is usually carried out over the phone with the estate agent. You should always mention any points that could make you a more attractive buyer here too. For example, if you're a first-time buyer, you are not part of a chain, which means you would be able to move in more quickly. If you're unsure how much to offer on the property, look at how much similar homes in the same area have recently sold for. Step 7. Apply for a mortgage. The most common mortgage types are fixed rate. You pay the same interest rate for the entire duration of the deal, regardless of interest rate changes elsewhere. Standard variable rate, where the rate is dictated by the lender and can be changed at any time, particularly if there are rumours that the Bank of England could increase their rate in the future. Tracker. The interest rate tracks the Bank of England base rate and changes the amount you pay accordingly. Step 8. Enlist a conveyancing solicitor. Your solicitor will carry out a series of checks on the property, such as searches, as well as drawing up and checking contracts, dealing with the land registry, and paying stamp duty on your behalf. Step 9. Have the property surveyed. A survey should be carried out as part of any house purchase to assess the condition of the building and look for any structural problems. It's important to note that surveys are optional. However, it's best to be aware of any issues before the transaction goes through so that you can reduce your offer or pull out entirely if any issues are detected. Step 10. Find a home insurance policy. Having buildings insurance in place on your new property is essential, as it means that you would have protection in place in the unlikely event that the building were to be flooded or burned down before the date of completion. If you're buying a new build property, the insurance would not need to come into effect until the date the transaction completes. Step 11. Exchange contracts. Contracts are exchanged when both the buyer and seller's legal representatives have signed their contracts. This is also when your conveyancing solicitor will lodge an interest in the property. Step 12. Completion and moving into your new home. The date of completion is often around 2 weeks after the exchange, but sometimes this can happen on the same day. This is when the money will be transferred to the seller and you can then collect the keys from the estate agent and move into your new property.